Welcome to De-Risk, the podcast where we provide a no-nonsense analysis of stocks. Today we're doing a deep dive into CrowdStrike, that's ticker CRWD. Now our research, looking at data from just before the market opened today, August 28th, 2025, shows something. Well, genuinely perplexing. You've got a company, CrowdStrike, that just smashed its quarterly numbers, announced a smart acquisition, and yet it took, a staggering 5% haircut in after-hours trading. Okay, let's unpack this.
Yeah, and it's happening against, what's truly fascinating here is the broader market context, right? Beyond just CrowdStrike's own news, we're waking up to quite a case of the jitters this morning. Pre-market futures are looking, mixed. Dow is hinting green, maybe. But the NASDAQ, the tech index, is looking pretty sluggish. It creates this hesitant mood. And look, there's good reason for it. Today is a real data deluge. We're expecting a fire hose of economic reports. You've got jobless claims, GDP revisions, inflation numbers coming out. So this whole cautious, uncertain backdrop, it offers basically zero tailwind for individual stocks, especially not for high-growth tech like CrowdStrike.
Right, that cautious backdrop certainly doesn't help things. But still, for CrowdStrike specifically to drop like that after what sounds like, a strong quarter that feels particularly harsh, what were the actual details? The good news, bad news, before the market reacted?
Well, the good news part is pretty clear-cut. CrowdStrike delivered a genuinely strong second quarter, no question there. They beat what analysts were expecting on both revenue and earnings, top and bottom line beat. And they even announced they're acquiring Onum. That's a strategic move, seems aimed at beefing up their main Falcon platform. It signals they're not just sitting back, they're investing to stay ahead of the curve.
Okay, so on paper, a solid beat, smart, forward-looking moves. Here's where it gets really interesting, though. Because despite all that positive stuff, the stock just plunged. What was the trigger? What was the bad news?
The rub, the bad news, as you put it, was their guidance. Specifically, their forecast for the next quarter. It came in just, a little shy of what analysts were hoping for. Not drastically off, but shy. And this is where that market mood we talked about becomes so critical. This isn't just any guidance miss. It's happening in a jittery market. For a leader like CrowdStrike that trades at a premium valuation, the market just mercilessly re-rated it the second that growth seemed to falter, even slightly. It forces everyone to ask, okay, does this high multiple tech stock still deserve that priced for perfection status?
You mentioned price for perfection, and you're right. Our own models actually placed CrowdStrike's fair value somewhere between $372 and $419, but the stock closed yesterday about $422, so it absolutely was priced for perfection. That slight miss on the guidance end was basically the pin that popped the balloon.
Exactly, but a good way to put it. And you can see this reflected in analyst sentiment, too. I mean, look, over 60% still rated a buy, which is strong, but we have seen a noticeable shift towards hold ratings over the last few months, and interestingly, even a sell rating has popped up now. That wasn't there before. And if we connect this to the bigger picture, sentiment was already a bit mixed, wasn't it? Short sellers, for instance, held a moderate position, about 2.75% of the shares shorted. That translates to maybe 2.5 days of average volume to cover. Not huge, but not insignificant either. The options market surprisingly looked a little more optimistic, actually. The put-to-call ratio was 0.97, so almost balanced, maybe leaning slightly bullish. But the key levels everyone was watching were clustered way up around $460 for distant upside, and a more immediate $415 level acting as potential downside support.
Okay, so let me get this straight. The company was already technically a bit weak, definitely priced for perfection, facing a nervous market. And then, bam, it delivers guidance that isn't quite perfect. What did the charts themselves tell us before this news even hit the wires yesterday?
Yeah, pre-news, the technicals showed a stock that was already looking unwell. Let's put it that way. The trend had been firmly downward for weeks. You can see money was clearly flowing out based on volume patterns. Now, there was maybe a slight flicker of hope in momentum indicators. It hinted the selling pressure might be getting exhausted, potentially bullish shift brewing, but really it only suggested a weakening of the downtrend, not a reversal. The trend was still down. And volatility, it had been shrinking, contracting for a while. That's often a classic setup for a big move, right? And that move turned out to be that sharp after-hours plunge. That was the culmination.
Right. So what does this all mean for today's playbook then? Let's bring it all together. Putting all these pieces together, the weak guidance, the premium price, the technical weakness, the nervous market, the verdict seems pretty clear. It points to a bearish outlook for today, doesn't it? The primary catalyst is just that weak guidance, hitting a stock price for growth, landing on technically weak footing in this data-heavy, nervous market environment. And that dramatic drop after hours. from $422 down toward the $404 range. Well, that seems like the market's clear, an immediate verdict.
Absolutely. That drop speaks volumes. So for today's battleground, you'll definitely want to keep a close eye on that big, round $400 psychological level. Immediate support, probably the pre-market low we saw around 406.7. If that level breaks, then you start looking down towards that panic level low hit in after hours yesterday, which was way down at $377.55. Now, on the upside, resistance is going to be tough. Really tough. The first major hurdle seems to be around $415. That was a key options level, and also where the stock failed yesterday before the news. And then above that, you've got that massive gap all the way back up to yesterday's close, near $422. Getting back there today looks incredibly difficult.
You know, this whole situation, it really raises an important question, doesn't it?
It does. If you think about CrowdStrike's report card, they basically got an A+ for the past quarter's performance, great execution, but maybe, a C for its future outlook based on that guidance? And it just goes to show, on Wall Street, you're really only as good as your next promise.
A stark reminder indeed. That's all for this episode. Remember, this podcast is for informational purposes only and isn't financial advice. Always do your own research or consult with a qualified financial advisor before making any investment decisions. Thanks for tuning in, and we'll catch you on the next episode of D-Risk.